Good day, everyone. Ali is here from Safi Financial Network. Today is November 3rd, 2023. Here is another weekly edition, but before we are getting to the weekly edition or weekly analysis, I just want to share some slides with you. So some of you asked about my performance, my own portfolio, and how my trading and my profit is setting up. So this is first time in YouTube video that I'm announcing my portfolio and releasing information. For sure, I'm releasing this information to my subscribers. They will get monthly updates, and any trades or any position that I take, profit or loss or close, they will get right away alarm. But this is the performance of my portfolio. So for those ones who know me, they know what I'm doing. So it's going to be kind of like a repetition of what they know. But for those ones who are new or they're just curious what's happening in my portfolio, this is first time that I'm releasing this. So before getting to the analysis, let's see what is going on. So here is my investment portfolio. And as you see here, everything is clear. And we had a nice performance so far. So it's kind of like a 20% year to date. And this is the performance of my portfolio. This is very, very safe, easy, relaxed portfolio. So we are just picking up good companies, good stocks, good businesses, and right at the good technical level, we buy them and we keep them. Sometimes we close the position early just because something is happening with the fundamentals or with the chart. But this is all the performance of my portfolio year to date. Some of you may make more money, some of you may make less money, but this is very, very simple, relaxed portfolio. All right. So the next slide is this portfolio and comparing to S&P 500. So as you see here, there is no benchmark, but the next one is S&P 500 set there as a benchmark. And this blue line is S&P 500. So as you see here, S&P 500 is sitting right around just above 10% year to date. So if you just buy simple SPY beginning of this year, and you just make a 10% or maybe 10, 12% like a profit year end, which is not bad for those ones, which is better, actually better than bond for sure. And for those ones who want to have like a relaxed portfolio, they just tie themselves into SPY, which is S&P 500 ETF, and they make some money there. So 2023 was overall in a positive year. But if you want to make better even, so 100% better than S&P 500 or double your profit, so this is the way that you can. At least it's going to be just a relaxed portfolio. And you see that the drawdown, which is the downside of my portfolio, is very, very limited. So compared to S&P 500, here is the March period. It goes almost to zero. So from year until March, nothing happening with S&P 500. But we are sitting at 9%, even from the beginning of this year. So when March timeframe happens, that sell-off, we were at 9%. We were sitting at 9%. And after that, you see that even in months of September, October, when S&P is going down below 10%, even 8%, 9%, we were sitting somewhere around 15% or so. So this is another comparison that you can see the performance, how performance is doing. And the next slide is going to be my new portfolio, which is option trading portfolio. And lots of people are saying about the option trading is going to be a risky, is going to be like it requires a big capital exposure. But this is the way that I'm doing. Just I launched it portfolio in almost, I should say, very, very late September. So late September, I just launched this with 5,500 Canadian dollar. So it's less than 5,000 US dollar. And today's date, this is 6,238, like $6,238. And the performance of year to date is going to be 13%. And obviously, because of October timeframe just finished, and in October timeframe, when we get into the November market just to spike up, and look what happened to our portfolio as well. So even in September, October timeframe, we were in positive and we were pretty stable, like sitting around 5%. Yeah, we had a drawdown. There is nothing wrong with drawdown if it is controlled and if it is mitigates acceleration to the downside. So lots of people just got whiny and bloody. We didn't go below 0%, not at all. So we were not negative. However, we were staying positive, and also when market is just getting to the upside, our portfolio is just boosting up to the upside and rocketing to the roof. And here is another comparison between S&P 500 performance. So this blue line is S&P 500 performance, and as you see here, this is the months of September and also entire months of October. So market just had like an uptick for the first half of the month, then going down all the way pretty close to 4% negative. But even during this time, we were staying at positive, like a green area. And then market just barely touch above 0%, which is pretty close to 1 to 2% since, like, let's say, early October or later September, we are sitting at a 13% profit. So this is the way that I just calculate and compared myself. And my end goal is a double perform the S&P 500 or overperform the S&P 500 even during the drawdown. This is very, very important. No one pays attention to that. But even during drawdown, I do care how much money do I lost. If S&P 500 goes down 30%, it's very important for me to just take a loss at 10% or 15%. Then I would be very, very happy. Then I would outperform the S&P 500 even during the bear market. So this is a short video for today, but in next video, make sure follow and watch the next video because I'm going to provide a weekly analysis for S&P 500 and also for lots of stocks and see where are we at. So make sure watch the next video. See you shortly. Bye-bye.